What's up, guys? It's September 21st, 2023. We had a good downtrend today. As always, we're going to go through yesterday's context, the market cycle, first 6 bars, where the buyers and sellers are, and the patterns that make us money. Let's get into it. So right off the bat, we've been in a downtrend for quite some time now. Since the 15th, it's been pretty much sell the EMA. Yesterday we had FOMC meeting, and it was a tight range into a strong downtrend. We had a big gap down today, and we had continuation. So that's pretty good. That's pretty good for the bears. Bam, 2-day continuation. Maybe 3-4 day if you count from last Friday the 15th to the 21st. This is a good trend for the bears. They've sold off about since that high, that failed breakup by the bulls. They've sold off 190 points. That's really good for the bears. So yeah, yesterday's context was a strong downtrend. We gapped down and have a continued downtrend today. Market context. If you watch the previous videos, we were playing around a range like this, but that range we broke out of that range yesterday, and we broke out of this low today. So the bears are strong. We are very close to the low from August. We are we're 20 points away from August low. So I think that's the magnet the bears are trying to hit first, because it was a really good selling today. Honestly, I got caught out pretty bad. Had a gap down into a sell. 2-day continuation. The market cycle is range, trend, range, trend, range, trend, expansion, contraction, expansion, contraction. So here we can see the market is somewhat contracting from this standpoint. Big move up, smaller move down, smaller move up, smaller move down, smaller move up. And then the bears break this move, and we start to expand. So here's the market cycle. Leg 1, leg 2. Honestly, I'm saying leg 3. Oh, shit. Excuse me. Let me fix that. Leg 1, leg 2, leg 3. Because there's no pullback here. Do you see any bull bars? Let me delete this arrows. On the third leg, no bull bar, no bull bar, no bull bar, no bull bar. Look, no bull bar all the way down to right here. First bull bar, and it sells. Something I've been trying to think more about is bigger time frames while I'm looking on the 5-minute chart. So yes, we sold off here strong. This happened fast compared to let's see 11 o'clock to EOD. They sold 53 points. 10 o'clock to EOD, we only sold 38. So yesterday's move was stronger than today's sell. But let's do the sell from the top of the gap. It's 74 points, including the gap down. So that's like including overnight price action. So what I'm trying to get at is, I don't know. We're going to see what happens tomorrow. But if this is considered the bigger sell out of the 2 days, and it's a third leg down, maybe we see some sort of pullback. Maybe we contract a little bit. I don't know, because today was strong. But I do know whenever I'm feeling like it's a strong sell, it's most likely going into a range, because that means since I'm feeling so strong about selling, there's so much evidence, there's so much price action showing me the sell is working. So that means I could be reacting and not thinking forward. And the reason I'm speaking like this is because I don't know if that's the real saying, full forwardly. What I'm trying to say is I'm not trying to lie to anyone. I did blow up in a couple accounts today, buying the dip. That's why this video is so late. I stayed away from the charts for a decent amount of time. I saw this double bottom, saw this rip up. This price action got me twisted. So that's why I'm trying to make sure I remain non-biased, that we do sell off tomorrow. I mean, it's only getting stronger. We do have a magnet right here. That's 20 points away. So see what the overnight price action looks like. And even bigger time frame, whatever time frame you guys want to see. But look at this. I didn't catch this because I really haven't been looking past the 1 hour chart, but that's a head and shoulders. And if we put this shoulder into the context with this sell, it makes a lot of sense. So that's where we're on the market cycle. We're selling, we're expanding right now. Let's go to the first 6 bars of the day. These are the first 6 bars of the day. Right away, bears make 10 points. And we know that through the lines. Here's the 10-point mark. They make that. With 3 bars, they make 10 points. So they're going to go for the 15. They go for the 15. Bears have a gap open here. And they're creating a gap here. We don't know what the pullback looks like yet because it's the first 6 bars, but right away, selling the gap down with the selling pressure shows continuation with gaps. These are all trending signs. This is strong. Bears have very strong momentum from yesterday. Gap down 10 points, 15 points within 30 minutes. Bulls have 1 bar with a huge wick. So the first 6 bars today clearly tell us it's going to be. It doesn't clearly tell us anything. It hints that there could be more selling than buying. The job of the first 6 bars is to help us with the context. And here we see 3 bars right away. This is a trait from a trend from the open. 3 bars in one direction. Look at the wicks. No wicks at the bottom of these bars. Okay, bar 1 has a very small wick. I don't even think that's a point. Okay, excuse me then. It might be 2 points exactly. 1.75 is the bull wick. Do you guys see that? Oh, okay, hold on right here. Okay, so bulls, so 2 points. Bulls make 2 points, and are they really making 2 points, or is this profit taking? Like, imagine all the swing traders, right? People are swinging their positions from yesterday, and right away the market sells. So I'm sure it'd be natural for some people to take profits. So those 2 points shouldn't be. Oh, I just switched the charts by accident. Okay, and we can see the rest of the day here. But those 2 points, it's about the context of the 2 points. First 6 bars. It's about the context of the points. Just change this up a little bit. Right, the first 6 bars, so it's the black box we're looking at. It's about the context. There's steady selling with a gap down. It's very strong momentum. We should expect more selling. And that's what we got in the day. We got a lot of selling, a little pop, and a sell. A lot of selling, a little pop, and a sell. Those are the first 6 bars of the day. Buyers versus sellers. This is very rare for a gap down with a bear bar to be the high of the day. But it is the high of the day. So there are sellers sitting from the highs. Right away they see that they're selling. I suspect there are more sellers and people waiting to sell at the EMA. The first leg down failed at the 15-point mark. How do we know that? 10 plus 5. I'm doing it fast because I'm looking at the top line. That's 10, and I'm just guessing the middle of this. So it's about 15. And it fails quickly. This strong bar is bears need to get out. Maybe you have a runner with a stop. You're bold if you do, but maybe you do. I don't know. Bulls get 1 leg up, pull back, 2 legs up. We have a spike, pull back, channel. That's an Al Brooks terminology. spike pullback channel. Two-legged pullback here, and bigger two-legged pullback. One leg, two leg, and it fails, creating they couldn't even make the double top. Bulls were so determined that bulls understood that they were going to sell. They couldn't even get out at their original entry price, so it sold. Bulls are hitting out as this bar is moving up. The bulls that bought this close are hitting out. So we have a bear flag, double top, lower high with the gap down. This is a strong sell, and if you had sold the close here, maybe market order -1 point, you would be gravy for the whole day. Let me move that down. That goes like right there. That's a little legitimate now. You'd be gravy. I mean, what is this? You put your stop at break even. Okay, you get pinged out. So 1.25 mark against you for a 37-point profit. So this gap down, bear flag, lower high, double top was an amazing sell, and it led to a swing. Trends are market order entries, and ranges are limit orders. Limit orders, people set their limits at lows, buy limits at lows, and sell limits at highs. Today, that's not the case. It's a market order. The market moves from limit to market, limit to market, limit to market, and it's just moving. Everyone's just taking turns. Limit order people make money first, and then market order. So we could just go back to the buyers and sellers. But what I mean by that is, it's just all sellers everywhere. Sellers at highs, sellers at lows, and all these bars started out as profit taking, with including myself, bulls thinking the gap down was too much. I can't remember a day where we gapped down and had this type of continuation in a while. It caught me out pretty good. One thing I want to talk about, me blowing out a couple accounts today, is I learned what adds to a trend. I had to keep selling out of my position. Stopped out. I got stopped out like right here. I made some money here. I got stopped out here. And then I called it a day pretty quickly because I was on tilt. But what am I trying to get at now? I totally went on a tangent again. So yeah, limit orders and sellers and buyers. I'll rewatch this and be like, oh my gosh, I can't believe I did that. But what? Oh, now I remember. What fuels a trend is traders like me. I'm a weak-handed trader. I kept getting stopped out, so my sell stop kept getting hit. The bears see my sell stop here, and look, I'm willing to bet so many people thought this was a wedge. This could be seen as a reversal pattern. Gap down, wedge bottom with a double bottom, and a spike up. That's a pretty credible reversal pattern. Obviously, it failed. Everything fails. Every pattern has two. It either passes or fails. This failed. The double bottom failed, and we sold. And I think a lot of people got caught out because look at the size of this bar. Look at the biggest bar where it's at. It's where all the stop losses would be. This is where bulls would have their stop loss. That's not a coincidence that bar took everybody out, including myself. And the sell just was relentless after that. So that's what I'm trying to say is trap traders create a trend. I don't want to be the trap trader helping the trend. I want to be the trader making money with the trend. But it's good to understand the perspective from the other side, I guess. I'm lucky and I only blew out my evals. I'm still on my $150,000 challenge account. And I made a lot of money on the challenge account. Actually, I banked on this leg up, and I made a little bit somewhere here, dude. It was a mess today, but I did bank on one of my accounts, and I'm very close to getting funded still. I am taking some precautions now because I realize when I'm making a lot of profits, my thinking gets skewed. So yeah, there'll be more talk about that later. I hope you guys learned something. You guys understand. Don't get caught on the wrong side of the trend like me. I Traders like me are the reason why the trend continues, is because we keep buying a dip and forcing ourselves out the market. Go with the flow. Gap down. No bars above the EMA. If you don't put any thought to it, it's just sell. It's just a sell. Hope you guys learned something. Keep practicing. Use your stop loss. Drink some coffee tomorrow. I'm going to get some sleep. Have a good night, guys.